Hi, welcome to More Than Mortgages. I'm Chad Anderson. Zach Jones coming up in just a few seconds. Today, I've been posting a lot about this. I like to kind of poke the bear. I like to get some reactions out of people on social media, especially on Facebook. And I've kind of been on purpose messing with people and saying it's okay to change jobs in the middle of the loan process. It's okay to go buy a refrigerator during the loan process. It's okay to do a lot of things. It all comes down to double check with your lender first and don't go rogue on anyone. So I've also seen some 10 commandments get posted. I've seen some people freaking out because of maybe what a customer did. Zach and I are going to dive in to all of that, and we're going to do it right now for the next 15 or so minutes, depending on how our soapbox goes. So let's welcome him in. How are you, Mr. Jones?
I got my soapbox all sharpened up for you today, Chad.
I like it. I like it, man. So yeah, this is all right. So this is, I was talking to somebody else. I didn't even get my words out because it's such a hot topic for me. I was talking to somebody else earlier today, literally about these kinds of things. And his complaint was baiting and switching, which is completely different, right, than changing jobs, although changing jobs can be a big deal too. But what we kept talking about and what it came to, and maybe we'll talk about this as our summary at the end, is that this industry, unfortunately, is so easy to get into. That's the real estate side. That's the mortgage side. It's just easy. Let's be honest. It takes a 20-hour course. Okay. Then you have to go pass a test. You do those two things, you have the power to help
Right.
someone get hundreds of thousands of dollars of loans in debt. Okay. It's really that simple. And you may say, well, that's still kind of hard. You have to do it. Right. But it doesn't take a 4-year degree to do this, is my point.
Right.
Like it can
Right.
be done in 30 days, like literally that fast, 2 weeks even. It can be done. So when those things happen and when your barrier to entry is so low, the problem is you have a low barrier of entry, and then you have a society, and it's not their fault. I'm not blaming them, but you have a society that doesn't understand this world, and they don't
Right.
dive into it every day. They don't do it every
Yeah.
day. They do it every few years. So they don't even know the ins and the outs. Who's lying to them? Who's giving them fool's gold? Who's telling the truth? Who's the better one to work with? And all the attention a lot of times gets diverted to, well, this was the best case scenario I was told, so I'm going to believe that one and hope it comes true. So I think first step before we get into this, I'd love to know your thought on it, but is the barrier to entry in this world is just a problem, because then you're mixing those people who barely get in or don't or shouldn't be in with a group of people, society, who aren't educated. Don't mean that in a negative way,
Right.
but they just aren't doing this every day. They don't know a lot of the pitfalls or things to be aware of.
I absolutely agree with that, and I think there's a little bit of a difference between the real estate world and the mortgage world. With mortgage being a little bit more technical and probably from a testing perspective, from a licensing perspective, is a little bit harder than the real estate side, and that's reflected in the numbers. I mean, you've got 100,000 loan officers,
Yep.
and what is it, a 1.5 million, 1.8 million real estate agents?
1.5-ish right now.
Yeah,
Yeah.
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 So it's a 10-to-1 ratio or higher, 15-to-1. So the barrier to entry is one of those things that in professions like this, and I'm sure that there are other professions like this. The professional organizations that do the licensure haven't done any justice to the profession by keeping those standards low. So it's a different argument for a different day. But then, like you said, you couple that with an uneducated, and we'll call it ignorance, because it's just the lack of knowledge about something. Those people don't do this every day. They dip in and
Yeah. Don't take
get
it the wrong way when we
right,
say
right.
this. Yeah.
You're just dipping in every 7 to 10 years and buying a house, and then it
Right.
fades, and you don't develop any expertise because you're not doing it all the time. I had a conversation with a guy last night, called in, and this is somebody that I'd done a loan for 4 or 5 years ago. And he was asking me, this is really interesting conversation. So he's asking me, hey, Zach, so I know you don't remember all the specifics about this, but I had that repossession back 10 years ago, and it's off my credit now. Is that going to be a problem getting a mortgage loan? And I said, well, so it wasn't a problem the last time you got a mortgage loan because your scores had recovered enough and it was
Right.
far enough in the past. I said, well, is an underwriter going to ask me about that? And I said, well, let's talk about your situation. Have you made any payments late? No, no, no. Have you made any mortgage payments late? No, no, no. My credit's been perfect. I just don't want it to come up and bite me in the butt trying to buy a new house. And so I kind of went through this same education process that I went through with him 4 or 5 years ago. And he was like, man, I'm really sorry. I just don't understand any of this about credit. It's completely baffling to me. And I'm a smart guy. I do very well in life. I just don't understand this credit thing. And it kind of stopped me. And I pulled back a little bit and I was like, this is exactly what Chad and I were talking about, which is that you have an uneducated public or an ignorant public that lacks knowledge about things. And then if you happen to couple that with a newly licensed and inexperienced real estate agent or mortgage person, then it's blind leading the blind. And nobody knows what to do about the home inspection that comes back and the ground fault circuit interrupter doesn't work. And they don't know how to address the fact that somebody forgot that they were in a mortgage process and decided to get a new red card at Target so they could save 15% off on tax-free weekend,
Gotta do
for
that,
back
Zach.
to school items.
Gotta
And
do
that,
that.
that used to be a giant problem, man. I can remember the tax-free weekends when they first started in Tennessee. Wow.
Yeah, no, it is, or was. But let's we don't have enough time to go through every scenario and
Right.
situation. And that's where Zach and I we more position ourselves as like we're not trying to be the know-it-alls. We just are more trying to inform and discuss openly about the things that are out there in this industry and eliminate honestly a lot of the BS that you read on the internet. Because Zach, I don't know if you know this, but if you read it on the internet, it's true. I don't know if you realize that or not, but it's a
Well,
real thing.
yeah, and we could spend, I think, just hitting the highlights of that 10 Commandments. If you don't know what the 10 Commandments are, it's something that's commonly posted by real estate and mortgage people.
Yeah.
10 Commandments of things not to do when you're under application or under contract or pre-approved for a mortgage.
Yeah.
There's truth at a surface level, but let's dig in a little bit because we don't want people to miss opportunities.
Really, it should come down to and actually I had an agent who reached out and said, will you double check my 10 commandments? Which I was kind of flattered about it. And I think it
Yeah.
was one of those points where I had just been, like I said, I like to needle a little bit and just kind of jab here and there and, get some people riled up. And so when I do that, I think she kind of was like, oh, wait a minute. Like, okay, well, maybe these 10 commandments, let's double check them before we
Right.
just start blasting them out to everybody. Because again, I have a personal story of a client of mine who had a job offer in the middle of the loan process to get an extra, it was 10 to 15,000 a year and work remote and get a title promotion at a new company. Who wouldn't want to do that?
Right.
But it's bettering his life. He gets more time at home with his kids because he works remote instead of commute. He gets more money. He gets a better title, which is going to improve his resume for potential future opportunities beyond that. So those kinds of things and reasonings are why you should double check with the LO instead of LO being loan officer, rather than having a blank statement of just, nope, don't do any of these within 30 days. And I'm gonna pull this up and see. I'm not gonna share the screen because I don't want to, make people all upset and whatnot by sharing some of it and whatever. But I'll find it here in just a second. I first one though is job change,
Right.
and it's just not a big deal, is it?
Well,
Or it doesn't have to be about that.
It doesn't have to be. And again, this is consulting with your loan guy or your loan girl to see if what you got in mind is going to impact you in a negative way.
Right.
If you're going from a general salaried or hourly position to 100% commission or a base plus commission, then that's going to be a problem. If you're going from being a W-2 employee to starting your own business, that's going to be a problem. Those are things that you need to wait about. But the most of the questions that we get are really not like that. Those people may have made those mistakes last year and they may have to wait, but it's more, hey, listen, I'm trying to get pre-approved. We're thinking about doing something in the spring. And I've got my resume out. I've got this job offer, but I really don't want to take it because I don't want to do anything about jeopardizing our ability to buy a house. And you dig in a little bit, it's a W-2 position. It's an increase in income. It's a salaried position. Like you said, maybe they get to work remotely. It's a betterment situation. And that's actually something, we don't like to see it, but that's something that somebody could do 2 weeks before closing and be fine with. It requires some extra work on the loan officer's part. Now, I'm not going to say that loan people are lazy, but I didn't say that out loud, did I? But somebody can actually change jobs, and I would never, as a loan guy, want to inhibit somebody's progression in their job and ability to better themselves, or lose out on an opportunity and say, hey, listen, just pass on that promotion right now. We don't want to upset the boat. And maybe you can come back to it. And then they come back to it and the position's been filled. It's not that big a deal to get an offer letter and re-underwrite and put a little, verification of employment together and go on it. People do it all the time. If changing jobs in a loan process, Chad, were that big a deal, people would never move across the country or to a different state or to a different city to get a new job. Right. And actually buy a house when they moved. They would all be renting somewhere for the first year that they relocated. Not a big deal if it's checked.
You'd never have a relocation. You're 100% accurate there. So that's one thing that automatically just makes it false. Here's the other thing, guys. There are guidelines that tell you what to do. So all you have to do is open the selling guide, which the selling guide is what we refer to it as, is simply the encyclopedia, and it's boring, of all the guidelines, and each program has its own book. So like FHA has its own, VA has its own that's online. They're all online. Fannie Mae has its own. Freddie Mac has its own. USDA has its own. Jumbo loans are going to have their own, and it's going to be a little bit different. They're all a little bit different. But guess what? They all didn't say, hey, America can't change jobs while buying a house. Nobody said that. That's why they write the rules, and you simply look it up and you go down the chart and it tells you exactly what to get, exactly what situations qualify, which ones don't, and what documentation you have to provide. So when I see those like in the 10 commandments, it really bothers me because there are literally rules written that allow you to do this. Again, we're just saying check with your lender because at that point they can look up the rules for you and go over them with you. And it's very simple and straightforward. Here are some others. So we'll go through these kind of quick. Don't buy a car, truck, or van. And then the little tagline, or you're gonna be living in it, son. Like, that's right. Okay. One. Odds are I walked 8 miles uphill both ways in the snow, and just it's not true. Now, could it impact your qualifying? Sure. If your debt ratio, which I did a video on this, if your debt ratio is 47% and you go get a new car payment that's $600 a month, that could disqualify you. Yes. Yep. If you call your loan officer, hey, car broke down, I got to get to work tomorrow, I'm thinking about buying this other one. Can I go ahead and do that? And I'll get you all the documentation. Well, what's the payment going to be? Okay, let me plug that in. Yep, you're good. Like, that's really all it takes. So have you ever had, you always comment on my stuff and say, what about wakeboards? So,
well, so
have you ever had one blow up because of that?
I tell you what popped into my mind is I had a situation years ago. I was pretty green loan officer, a little wet behind the ears. I had a client who was pre-approved, got under contract, and debt ratio is pretty tight. And how did it come to pass? I know what it was. They sold their car
Okay.
in order to get the money for their closing costs. Okay, the money was supposed to come from a gift,
Okay. I
and
got
they
you. Yep.
sold their car,
Hold an
their
asset.
primary
Yep.
mode of transportation.
Yep.
And I was like, "Oh, we're going to have to document that. We'll have to get a transfer of title and a bill of sale and all that." Well, so the underwriter, I was naive loan officer. Underwriter comes back and says, "How are they going to get to work?" And I was like,
It's valid.
that's none of your business. And she said,
I
"Yes,
love
it is
that
my
answer.
business."
I love
They,
that answer.
oh yeah, yeah. So that went over really well with the underwriter,
Yep.
and they said, "No, they've we understand that there's a commute to work. Now they have no way to get to work. The work is the primary concern for us. They've eliminated the only transportation that we see. They got to buy a car." And so my borrower was over there saying, "Well, I read the 10 Commandments and it didn't say anything about selling cars. It only said things about buying cars." Well, that's a kind of a reversal of a rule that a lot of people would never think about. So again, talk to your loan officer, check things out, and try to make sure that what you're doing is within the guidelines. And somebody who has a 27% debt to income ratio, and they want to go buy an RV or a wake boat, they want to go to here in Middle Tennessee, we've got the boat show coming up here in next weekend or so, and that's where you get the best boat deals of the year is in February. So that's not completely out of the question, but you better manage your P's and Q's and make sure that those ratios are working for your March 1 closing if you're going to buy a boat in February.
Another one, and this one to me, again, it's very surface level. Don't use credit cards excessively or let current accounts fall behind. That's actually not 100% true. Now, we don't want you to, trust me, and you shouldn't, especially letting accounts fall behind. You should always make on-time payments.
Right.
However, we're going to pull your credit at the time of application. That credit report is good for 120 days. So if we're talking bluntly here, we're not going to know, right? I mean, we're not going to know if you run up
If
your debt
Right.
or if you miss a payment. We're not going to know. The only time that it could come up is there are requirements to show that a mortgage is current. So if you own a home and you're keeping it, or even if you're selling it, but if you own a home, they may want to update the mortgage history because you can't have mortgage lates. But if you run up your credit card debt, like nobody's going to rerun your credit report.
Right.
If they do it, it's for other reasons, not for that. Did I miss anything there?
And no, it can happen. It can happen. Now we will know if you do open something new up,
Yes.
because we'll get an alert and we'll get a ding because we're monitoring for new activity. But people ask me, "Hey, can I buy a new washer and dryer on my credit card?" That's fine, but don't go open the new account at Lowe's to save the 20% and get the free removal without really. We need to talk about that, especially with Lowe's. Lowe's has some kind of special considerations there, but new accounts are not completely prohibited. I would say probably discouraged unless it's a special situation.
Wow. I told somebody yesterday it was fine.
Well, I mean, again, look, if it's well documented, I'll dig into the Lowe's thing a little bit. I used to have a lot of problem with Lowe's because people would go get a new appliance package because it was a custom and new construction in Middle Tennessee, at least, where you didn't buy the appliance package from the builder, you bought it yourself. And so you go to Lowe's, get 20% off for opening up a new account. And then people would leave the store having conducted that piece of business and they didn't have a credit agreement. Where we ran into trouble was that Lowe's cannot provide a credit agreement until it's gone through the process, and processing takes 45 to 60 days. So if you don't leave the Lowe's store with that credit agreement in hand that you signed, then you're going to be in trouble. And I had several people that had to go back and pay that appliance package off or cancel the contract. Rather you not cancel the contract because you need appliances, right?
Correct. Yeah. And that was mine. It was the fridge. And it was, hey, if I wait to order the fridge after closing, it's going to take a week to get here, and we don't have a fridge for a week.
Right.
I get it. Kids got to eat. So, other thing. Now, back up. If the DTI was 50%, I would have told them no. Okay.
Right.
Like figure
Don't
it
do
out
anything.
in a
Right.
polite way.
Right.
But yes, in their situations, perfectly fine because they checked with me first before they went and bought. This one also just has other things like don't buy furniture. Same concept. Like it's probably not a big deal unless you're borderline qualifying because that furniture payment could kick you over the threshold on qualifying.
Right.
Um, don't originate any inquiries into your credit. Basically, don't have anybody look at your credit. We do find out about that. So if somebody pulls your credit,
Mhm.
we're going to ask you why. And then you have to say, oh, I opened a new account, or no, I didn't open anything. It was so I could get a t shirt or
Right.
whatever. Don't omit debts from your or debts or liabilities from your loan application. That one's actually hard to do with technology today because we get your liabilities, not you. So that's kind of hard. The biggest one I've seen there, Zach, is don't if you have something that's not on your credit report, but it's like a private loan or something you have to pay for every month that is credit extended, and it comes out of your bank account every month or twice a month, and it's the same exact number,
Right.
ourselves or the underwriter is going to catch that and they're going to ask what it is. So I would just say you should make sure you list all debts, even if they're not on your credit report.
A great example of that would be because we don't really see those kinds of credit lines very often. But what we could see is maybe a garnishment from an old debt that was settled, or a child support payment. You might have the question in the application: do you have any child support or separate maintenance, divorce, alimony, or something like that? No, no, no. I had that, but it's all done. But then we get your pay stubs, and there's a garnishment for back child support. That's an
Mhm.
undisclosed debt, and that's gonna ding us at the on the backside.
Yes. Let's see. A lot of these are kind of the same bucket, just reworded. Don't co-sign a loan for anyone. Well, that's taking out new debt as well.
Right.
If you co-sign, so yes, be careful with that. Check with your lender. Don't make large deposits. Yeah, and if you do, but that's the thing. If you make a large deposit, then we just end up not counting it. Like, that's really all that happens. You can, but don't do it and then expect us to be able to use that large deposit unless
That's
you
key.
can prove where it came from and it's a valid source. Mattress
Right.
money, probably not going to be 99% not going to be able to use it.
Right. And
Um,
that's something that I've run into kind of fairly regularly. One of my favorite stories is that my wife has a young cousin. When they were first time home buyers, got married and wanted to buy a house, and I said, "Where's your down payment coming from?" And he said, "Well, I'm gonna sell some cows." And I know they keep cattle. And I said, "Okay, so are you trying to trade something to Farmer Brown down the road, or are you taking these to auction?" He said, "No, no, we'll take them to auction." I was like, "Hey, that's golden, because now you have a bill of sale through a business that documents the sale, and then there's a deposit that comes from that with an instrument, a check, and completely legitimate source of funds that he liquidated right on at contract time for the down payment closing costs."
yep, 100%. Um, that's really about it for this one. So I get it. You're trying to get 10 commandments, so you stretch it out to 10. But there's really like three or four things that we keep an eye out on. And that's it. But again, just because we're keeping our eye out doesn't mean that you can't do them. It just simply means, hey, you need to check with us first.
Right.
So the only other thing left on this, we can kind of wrap up here and break until next week is talked about it early on, convenience. And I think there's a few reasons why people say no. And I want to believe all humans are good, but there are still a few reasons as to why people say don't do these. Okay. Uh, Number one, they could just not know. They could just simply
Right.
not know the rule. They may not know that there are rules written, but I always say pass the logic test. Like what you said earlier. Are you trying to tell me that no matter what, nobody in America can change jobs to get a loan? Like that's what you're telling me? You can't relocate, you can't take a
Doesn't,
promotion, you
doesn't
can't
make
switch a
sense.
company.
Right.
Doesn't make sense, right? That's not logical to think that. Um, the other reason is they may feel inconvenienced. You may be all the way through the process like, that one's done. Moving over to these two.
Yeah, we're
Got to
clear
work
to
on.
close. We're clear to
Yeah,
close. It's all buttoned up. My mind's all the way down the road, and we don't want to bother the underwriter and resubmit, change
right.
the application. All of that stuff needs to be done.
Yep, it's just part of it. Because even though you may have to do it on that one, there's probably 20 you didn't have to do it on.
Right.
So it just comes with the territory. And then a last thing, but you feel free to add on. Sometimes people are doing it because they are worried about the deal falling through. And when the deal falls through, a lot of people are impacted. The seller, they don't get money. Buyer doesn't get a house. Realtors don't get a commission. Homeowners insurance people don't get their unit for the month. Title company doesn't get their title insurance.
Right.
Loan officer doesn't get their cut. You just go on and on and on and on. About the only people who do get paid are the inspector, the appraiser, and the credit bureaus. And that's about it. And people get worried that, oh, if we even breathe on it, it's going to blow up.
Right.
So don't touch it. Don't mess with it. Kind of.
In order to not do anything stupid, you must do nothing at all. Because there's a chance if you do something, it's going to blow it up. And that's a better safe than sorry strategy. Probably, I mean, that's legitimate, but we don't want to take these rules so far that you're destroying somebody's ability to better themselves and take a better position and do better for their family and advance their careers. It just doesn't. You got to talk through it.
I've been jumping on and off mute because it's nap time here. And
so you were suddenly
sorry
quiet.
for the half-second delay. Yeah, I was trying to be rather safe rather than sorry, Zach. But,
right? Yeah,
didn't work out too well here. But anyway, to summarize everything, guys, one, don't live in fear on these topics because it is okay to do some of these things. You really just need to ask myself or ask Zach or ask whoever you're working with as your loan officer or your banker, and go that direction and just run the scenario by them. Now, you also have to be extremely upfront and you have to be honest, because if you leave something out, they may tell you an answer based on what you give them, but then it could end up being a problem down the road. So you got to be aware of that too and lay that out. Be firm. Hey, this is all I know, or this is all the details. And then past that, we just want you guys to understand that there are still options and not get freaked out. We want realtors to understand that it's okay. Maybe you're a listing agent and you catch wind of this through the grapevine and you lose your mind, but it may be okay, guys. So all those things, really just trying to bring education and truth to it. Final thoughts from you?
I think that's all. It's a matter of, I really like that kind of add-on that you put in there, that you've got to be honest and clarify and put everything in there together. All right. Special guest host here today.
This one's Lachlan. He goes from happy or from pissed to happy pretty quickly.
Okay. Just stay happy for the next minute or 90 seconds or so.
Give me 45 seconds here. Yeah.
but the information, full disclosure, and what popped into my mind, Chad, when you said that was like, hey, I got this new job. I got a great job offer. I'm going to be making more money. It's still salary. Everything's great.
Yeah.
The loan officer has to be astute enough to ask, is there a probationary period or things that you're not going to be able to clear before closing that are going to, any conditions of employment that we're not going to be able to meet before closing? Because that could be a deal killer right there.
It could.
So it requires more than just a casual conversation or a text. Hey, am I good? I got a new job. Yeah, bro, go ahead and get it. You might get yourself in trouble with that kind of a conversation.
Yeah. Sign up, man. Hey, are they hiring 2 positions? I might be interested, Hey.
Right. Got any extra room there at the plant?
Yeah. All right, guys. Appreciate you hanging out. We'll be back next week with more of this. We may talk appraisals next week. We haven't finalized it yet, but appraisals always a sensitive topic. Zach and I were talking about VA and Tidewater before we got on here. And, with the market trending and with home sales up and home prices up and all these things going in this direction, with appraisals, it takes a minute for the values to catch up. Right. And so if you're overpaying, you may start to see more appraisal gaps and shortages in 2024 and 2025. So we can talk about that. I think that'll be a good topic.
Yep.
And an interesting one. So, all right. He's Zach Jones. What's your name?
Lachlan.
Lachlan. Yeah. How old are you?
3.
3. Okay, cool. I'm 38. You guys have a good one, and we'll talk to you next week on More Than Mortgages. Take care.
Thanks.